Hey, Steve Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you're getting sort of value and entertainment out of these videos, all I ask that you hit thumbs up and subscribe. Questions, comments, put those below. I think this is going to be a great show this week. Lots to talk about, lots to get through. But I want to start it off with probably the funniest thing I read all week, which was if you haven't been following the Australian housing sector and kind of what they've been doing over there. So about a year ago, they brought in policy measures to kind of slow or to bring in more responsible lending. Obviously, they have runaway house prices, massive household debt bubble over there. And so the regulator brought in a bunch of policies to kind of curb lending, to make it a little bit stricter. Obviously, they have interest-only mortgages over there, etc. They've actually just announced that they are now reversing that decision. So the credit spigots are going to be opening. So I have to laugh. I mean, obviously, they look at it and they say, "Oh my gosh, like, ooh, things aren't looking too good. House prices are starting to come down. We better take off these." Just the way that it's quoted. They called it, the program was called Responsible Lending, and they said, quote, "excessive risk aversion, which has built up and restricted the flow of credit, is no longer making it responsible." So now, basically what they're saying is we need a bunch of shitty credit borrowers to kind of keep this thing alive, so loosen up the taps and go nuts. And so that's kind of what they're doing. What you kind of have to laugh, because they're basically they're not even hiding it anymore. It's clear as day in plain sight. I mean, the reality is Canada, also does similar measures, which we'll certainly talk about. I mean, we did that in 2008, 2009. Everybody wonders why there was no real housing correction in Canada, while, a lot of countries across the globe, had significant downturns. Obviously, the U.S., housing prices collapsed over there. But a lot of that had to do with the programs that were brought in. Basically, Canada essentially decided to double down on credit and on borrowing. So they actually went in and eased lending restrictions. And a lot of those was facilitated through programs such as the Insured Mortgage Purchase Program, where essentially the government took mortgages off the bank's balance sheets to encourage them to lend money. So I would argue that we're almost back in the same sort of playbook today. The IMPP was reintroduced this year through CMHC, and obviously now it's actually the Bank of Canada that is taking the load on this time, obviously wrapping up their purchasing of Canada mortgage bonds. That's been providing the liquidity to the Canadian banking system, which in essence is allowing banks to continue to lend. And I don't know if anyone's really in the market actively and is actually paying attention. So if we go back in, let's say, April, when the pandemic was kind of hitting, and everyone was looking around and going, "Oh my gosh, there's no way the banks are going to be able to lend. We don't even know who's going to have their jobs in a week or two. There's going to be a massive clamp down on the credit. Banks will have to be conservative." And that was really the fear. And obviously that was going to perpetuate into the housing market. And certainly that was, if you watched Evan Siddall's recent interview with CMHC, that was one of his concerns, was this would perpetuate into a contraction in credit, and then, through that mechanism, house prices decline. But obviously that hasn't happened. If you look at national home prices, they're actually rising, and you have to say, well, they're rising in a recession, an unprecedented recession / pandemic, which has caught a lot of people offside. So, which brings you to the point, is that, does that not perplex anyone? Does anyone that's actually in the market notice that the banks are actually, in the residential mortgage side, are actually aggressively lending right now? I would not call the banks conservative today. I would not look and say, well, based on the unemployment situation and how terrible the economy looks, that the banks are being conservative. I would say that they're, given the circumstances of the environment, I would say they're being very aggressive. And what's actually happening is the banks are engaged in competing for new residential mortgage borrowers. They're competing for new loans. That's their greatest source of business revenue. It's probably arguably they view it anyways as their safest. Why would you as a bank, if you have the decision to lend to a small business or a medium-sized business, or you can simply issue mortgages on residential real estate, which is heavily subsidized by the government, which basically supports that asset class. Which one would you lend to as the bank? And so that's basically the business that they're focused on right now. And so obviously we see everyone competing on mortgage rates today. Now you're getting a 5-year fixed at like 1.7. And so this is the game that is being played. And so I think that has to obviously factor into the investment thesis, which I'll kind of, look at, for example, we can always talk a lot about Vancouver and Toronto, but I was going through the housing statistics for the month of August. Lo and behold, again, this is how the banks work, right? They create credit and they allocate credit similar as an investor would. So they kind of decide where they want to aggressively lend money and where they want to pull back. So if you ever try to get a loan, for example, in Alberta, very difficult. Now, if you're trying to get a loan in Ottawa today, anyone in this YouTube video section trying to get a loan in Ottawa, anybody, here is the home price index in Ottawa, up 20% year over year. 20%. Home prices in Ottawa are up 20% from last year. Now again, this is the home price index. This adjusts for sales composition. So this is not just like, well, people are buying bigger houses in the pandemic and that's skewing the average price. No, this is not the average price. This is the hedonically adjusted home price index, which adjusts for composition type that's selling. So again, 20% inflation of housing prices in Ottawa. Montreal, 16%. 16% year over year. So there is massive house price inflation right now. Obviously, we know that parts of Vancouver and Toronto are not doing as well, particularly the condo segment. But given this environment, you should not be seeing double-digit increases in home prices during a recession of this magnitude. So that's the bank lending part. Now we'll get into the mechanisms of that are also supporting the current market, for example, that has basically ridiculed forecasts like CMHC, who again recently came out, did an interview and doubled down on they're now calling for kind of a 9% high single digit price correction in the sort of mid 2021 as the deferrals come off, which again, personally, I still, people say, well, what's your opinion? What's your view? Personally, I still think that's a realistic assumption. I'm looking at parts of the Vancouver condo market, for example, where the prices are already coming off. I mean, you go downtown, it's a 10% discount minimum. And parts of the condo market, it's really only like the detached houses are actually kind of hot and prices are moving up in that segment. But when you have the amount of fiscal support that's coming through. We had Justin Trudeau stepping back onto the stage this past week, and as I kind of had anticipated, I put it in these videos back in May and June, was that the CERB would be extended to at least the end of the year and into next year most likely. And what they basically did is they basically rebranded it. So they came out this past week, and the expanded EI program, which is basically CERB 2.0. Remember a couple weeks ago, they came back and said, well, it's going to be $400 per week. So that's down from CERB, which is $500 per week, $2,000 a month. It's going to be $400 now because we obviously need to try to incentivize people back to work. So he comes out in this throne speech, and they increase it back up to $500. So that didn't take very long. That didn't take very long at all. So that's now to $500 a week again. The Canadian Emergency Wage Subsidy, the wage subsidy for businesses and corporations, that's been announced to extend it till summer of next year, 2021. So that's another one. So, the money is just going to continue to flow through from the fiscal side. I mean, if you want to talk about, deficits, and I've talked about this in the spending. The Canada's budget deficit from April to July sits at 148 billion. That's compared to 1.6 billion a year ago. So we're at 148 billion compared to 1.6 billion last year. So you can say, well, deficits don't matter anymore. And again, this kind of brings us into the MMT, modern monetary theory, that essentially central banks are going to mop up every single bond out there. We're going basically down the road of Japan, and I have to laugh. These economic commentators are out there saying, "Oh, it's only temporary." It's not temporary. You cannot remove central bank purchasing at this point of the game. Let's take a look at the. I've talked about this before in my videos. We actually have a chart now to support that. Let's take a look at the government issuance of bonds versus the central bank purchasing of bonds. So as you can see, for example, on the long end of the curve, longer dated treasuries, or longer dated government bonds, I should say, the Bank of Canada is actually purchasing more than they're issuing. So they're actually decreasing the net, they're decreasing the supply, and obviously they're very active on the short end, which is of course helping your mortgage rates. Enjoy your 1.7% 5-year fixed, courtesy of the Bank of Canada. So at this current pace, assuming nothing else changes, by December of 2021, the Bank of Canada will own 60% of the Canadian bond market. So they will be the majority player of the bond market. Now let's extrapolate that, 5 years down the road. What does that look like? So again, I think we're going into this basically idea that government will issue as much debt as they want. You can talk about CERB, you can talk about wage subsidy, you can talk about that expanding and morphing into universal basic income, but these programs will continue to flush out money. I think at some point it turns into sort of this helicopter money where there's a direct injection into people's pockets, essentially, as a universal basic income, and that gets spent to drive consumer spending because there's simply too much debt and there's just not enough economic growth to support these debt levels over the longer term. So in order to do that, they're going to have to basically just hand people money, and so what they're going to do is the government will essentially issue bonds, debt, and the Bank of Canada will be the sole purchaser of said debt. And then eventually you own, essentially the end game is you own 100% of the bond market, and then you just stroke a check and you say your debts are forgiven. So that's kind of the essence, essentially, of MMT, modern monetary theory. Clearly, if you look at any of these budget deficits, the spending of the Liberal government, every sort of path that we're going down to, it seems perfectly clear that that's kind of where we're going to end up. So that's kind of what I had for this week. You can clearly see governments globally, what they're doing to kind of, support the economy, support asset prices. Obviously, I think people, at least from a moral perspective, didn't think that the governments would necessarily go to this length, or central banks wouldn't quite, maybe they would do the right thing and introduce, not an austerity, but you create this moral hazard where, again, if you continue to come in and bail out the banks or bail out all the asset holders, for example, you just create a perpetual feedback loop. So you figured maybe they would kind of let a few things fail here and there, but clearly that is not on any politician's appetite. So this is kind of where we are today, and obviously continue to monitor this on a weekly basis. That's what we do in these videos. So hope that helped. Hope that brought you some value, entertainment. Hit thumbs up and subscribe, and we'll see you next week.